Trading stocks, options on stocks, futures, options on futures, and retail off exchange foreign currency transactions, forex, involves substantial risk of loss and is not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guide Limited is an authorized representative of Forex Max Limited and regulated by the Financial Conduct Authority number 229906. G'day folks, this is Danny Younes from superchargewyckoffvsa.com. I'm the author of Supercharge Your Trading and Investment Account using Wyckoff Volume Spread Analysis. Now in this video today, what I'm going to go through is how to determine when there's going to be a change in behavior in a instrument. Okay. Now the very first thing that I'll look for when I open up a chart is there areas that have got ultra high volume. And this is a 5-minute chart of the Aussie USD. And what we can see, folks, is we've got ultra high volume. This bar right here, massive volume, the biggest volume for some time. So if I squeeze in the chart a bit, it's the biggest volume, in quite some time. So what that tells us is that when weakness appears, it appears on an up bar. And when strength appears, it appears on a down bar. Okay, so people think, okay, how can weakness appear on an up bar? There's ultra high volume here. The price opened here, closed up here. Isn't that strength? Isn't that buying? Okay. What you will notice with the VSA methodology is that when you get ultra high volume on an up bar, that tells us that professional money are starting to become active, right? And they are starting to sell their holdings. Now, this move here would have been around news, I would gather. Okay, so that's the perfect time for the professional money to become active around news. Okay, so we see ultra high volume on an up bar. We get a VSA principle here, a sign of weakness 26, supply coming in. Okay, so if we just go through the bar description, it says this is an up bar showing an increase in volume suggesting supply has entered the market. If volume is ultra high, this could be climactic action, and we do see ultra high volume. Sometimes this can be a breakout through an old top, which is a sign of strength. However, make sure that it is not a false breakout, which is a sign of weakness. Okay, so certainly this is climactic action. It's broken out above a previous top. Okay, so what this shows us is that there is it may look like there is strength at this stage. What I wait for is the very next bar to see if we see continued buying, and the next bar is a down bar. Okay, so that down bar basically confirmed that sign of weakness. Now, the price is not going to fall straight away. Once we get a VSA principle, a sign of weakness, the price is not going to fall straight away, because the professional money will start to create a campaign. All right, they want to lure the retail traders into poorly conceived trades, and they'll push the price up, right, so that the retail traders can start buying, and they're basically selling their holdings. Now, if you look at the volume on this bar, it's ultra high. Now, if this was a serious, strength, a serious uptrend, then we would think we would get, higher volume on up bars as we're going up. But have a look at the volume of these bars. All right, so we get much lower volume. This up bar has got low volume, it's not that high. That's not, convincing volume. This one here is also low volume. Okay, so and we've got a VSA principle here. One sign of weakness 134, no demand. Okay, now the market is still pushing up even though we've got low volume on these up bars. Now this bar here, it's a widespread up bar. It's high volume, but we get the next bar is down, which basically reverses that move. So it's not looking very, very strong, but we do see price still moving up, right? And we do get no demand VSA principles appearing. Now ultimately we get this bar here, which is also no demand. Okay, so but look at where, if I zoom in here, look at where, right? Look at where the bar closes. Right? It closes towards the middle of the range. So to me, that is, that is weakness. Right? Weakness is starting to appear. So there's no demand to drive the price up. The bar closes in the middle of the range. Okay, and we get the next bar, which is a pretty decent down bar. Okay, which closes on the low. Okay, so that basically confirms this principle. Now from here up to there was probably around, a 12, 13 pip move, up to those highs. But what the professional money did is that they're starting to sell their holdings because they have most likely bought, and this is where they've most likely bought down at these levels here. Right, so they've driven the price up. Right, they've gotten rid of their holdings. Okay, and now they want to start looking at selling. Right, they're not buying at this stage, but they need the retail traders to start buying. Right, in order for them to sell their holdings. Okay, now areas of ultra high volume. They act like a magnet. Okay, prices get attracted to those levels. So what I do here is I place a horizontal line on the high of that ultra high volume bar and also the low of that ultra high volume bar. And what we can see is price basically comes back and trades within that area. Right? So if you have a look here, folks, right, we've got ultra high volume here as price went up. It came back down, hung around this ultra high volume area, and then we had another push up, and the volume is not as high as it was back here. Okay, so once again, that is weakness, right? And we do get VSA principles here, a buying climax, right? We get supply coming in, and we get a further supply coming in. Okay, we can see on those bars where it shows supply coming in, we do have ultra high to high volume. Okay, but the buying climax is a clue that higher prices are not likely to occur. Okay, so they basically test these highs here and they start to sell off. Okay, so once we get the buying climax, that was confirmed. This supply coming in, that was confirmed, and we saw price come back down. Okay, so the Aussie dollar over the last few weeks has reached above 80 cents. All right, and now they're starting to sell off. All right, and the main reason for that is because the RBA, they don't want a high Aussie dollar. Okay, it's no good for the Australian economy. Okay, so they will start to talk down the currency because they much rather prefer the Aussie dollar down at around the 70 cents level. That's where they're most comfortable. Okay, so with this pricing action, which occurred around about that 79 cents level, now it's pushed its way down towards the 78.5 cent level. Okay, but we can see the weakness appearing on this bar here. So when you're looking at the market and you see something like this, you say to yourself, okay, we may be getting a change in behavior. Now, if this was bullish, okay, I would expect the next bar to be up. But what they do, if you do get ultra high volume on a up bar and the next bar is up, that bar will be tested. So they'll mark the price up, push it back down, test the highs of this ultra high volume bar, and then push the price higher. All right, and if it's a confirmed test, they push it higher. But in this case, this is weakness. So they don't drop the price straight away. They create a campaign. They mushroom the price over. Okay, you see as it goes sideways, and then they'll mark the price down. So we saw here the price breakdown beneath our lower trigger level here at around about the 78.80 level. Okay, so what we look for are signs of weakness below this level. Okay, so we do get a sign of weakness here. This is a trap up move, which wasn't confirmed, but it's still weakness. And as you can see, the Aussie has dropped even further from this principle. Okay, so at this stage, we are seeing weakness in the Aussie. And if I bring up the VSA Smart Center Pro, right, let me just reset that, and I'll sort it. We can see the weakness. Okay, so we've got the 4 hour, 1 hour, and 30-minute, and the 15-minute time frames are down. The 5 and the 1 minute are up, and we can see on the scanner exactly what is happening as well with each of the time frames. Okay, so at this stage we do see that the Aussie is weak, and if I bring up my currency strength meter, it's 1 second, here we go. My currency strength meter is showing that the Aussie is neutral. Okay, and then at this stage the US dollar is weak, so we may see at this stage now price moving up, and that's what we're starting to see. So we'll probably head up towards this trap up move bar. Now if we do get no demand at this level here, then this is a sign of weakness, and we're likely to see the Aussie fall. But as you can see here, as prices were marked down, we start to get signs of strength, and that pushes price higher. And then if we start to see signs of weakness here, no demand after this trap up move, then we're likely to see lower prices in the Aussie. Okay, so that's how you basically identify the change in behavior on a chart, and you can set your trigger points as key levels where you look to take trades. Okay, so our trigger level here was 78.80. A breakdown beneath that level, then we look for VSA principles to the short side for us to take shorting opportunities. If you got any questions, folks, please send through your questions to info@superchargewyckoffvsa.com. Have a great trading day, folks, and I'll see you in a future video. Bye for now.